Good afternoon, everyone. How's everyone doing today? It's Thursday. I think they call it what Friday Eve. It is Thursday night football also, so that's a hell of a good thing. But what a day! I think today was more so a little bit of a slaughter. I mean, we had particularly what 2 or 3 good days so far this week. I think maybe you could say that we were due for some kind of chop day, some kind of premium eating day. Today definitely felt like that kind of day, and that's basically what usually happens when the market is awaiting data. All right. So that's basically what I pretty much determined from that. Now, we did have a lot of Fed speakers today. That was pretty much the highlight of the day. We had so many Fed speakers. Do I really think that really had any kind of involvement in the price action that we saw today? Typically, we see any kind of comments that maybe give us some kind of whiplash towards one side uh, at any particular time of day, intraday. That was not necessarily the case that I really saw. We did see that early whiplash earlier on. You could probably say the first 2 hourly candles after open. That was basically where the indecisive was. And hopefully, if you got in pretty much after saying your opening range of the market, you were pretty much, I want to say, disciplined to know that you took your profits rather quickly once you saw that 10 to 20% profits, because that's where it comes into the fact that as I kind of zoom in on ES chart here, you can basically see these two candles sitting right here in the middle before we literally got a little nice decline. You see that whipsaw to the upside, and then the next hour after the market open, you saw the whipsaw to the downside. That was pretty brutal, especially if you held to your guns and you were pretty much trying to force the direction to the upside. That's where you really got into a jam, and hopefully you were able to pretty much cut your loss at a reasonable percentage. All right. Otherwise, I guess I can also point out a few things. That was pretty much of obviously being the fact that I was still going to talk about levels here. The bigger level that I was watching for this morning was that 3805 level. I think I mentioned that on live yesterday. Was 3805. As I saw, we basically attempted to break out above that 38.5. That was our high, basically dating back towards Tuesday, and then we attempted to break out the high from yesterday. But as you see, that was literally just a wick fish that we got and basically a fake out for that breakout, and we saw pretty much end up going right back under that 20 EMA here of the hourly, and we saw the rather slow decline that we had. So that was pretty much what I saw, pretty much just going off of levels. 3805 was ideally just the bigger level that I was watching for the upside. And we saw the nice little base that we tried to get for that reversal attempt, basing between 3766 and 3781. All right. Now here comes the indecisive moment, because right now the market's left us at a juncture where it's really hard to say whether we're gonna go up or we're gonna go down. All right. By the way, afternoon, those of you that kind of comment in the comments here, Resh, Wayne, Veer, I'll get to those names real quickly here, so give me just a quick second. Just covering futures real quick, and I'll get to those tickers for you in just a moment. All right. But like I mentioned, pretty much with futures, giving us just a moment of being in the middle of I want to say a minor megaphone. As you see, if I zoom in here right now, this is basically the structure of a minor megaphone. That's basically what we're sitting at. One thing that I've actually preached, I want to say for the few weeks, maybe for much longer. But going off of my EMAs here, you basically see that we based off of our 100-day EMA as a support for right now. That is right. You see that we based right off of that 37.50 mark, going right into the close, and that's where it's gonna get a little bit dicey going into tomorrow, because tomorrow morning we do have non-farm payrolls coming out for the month of September. Now, it's going to be interesting. I would anticipate that those numbers are going to be weaker than expected. We did have jobless claims actually tick up yet this morning. If anyone actually noticed, those numbers were a little bit higher than anticipated. So that's where I'm going to look to see how those non-farm payrolls react to the market, of course. But I'm going to look more particularly to see if we end up dropping down to the support of this megaphone, down towards near 37.20, 37.21, and how the market's going to react. Because one of the biggest things that I've kind of been in my takeaway here the past 2 days or so is that you see these morning, I want to say reversals. Yesterday morning we had the reversal as the market opened red. We flipped green and we started to trend. This morning we saw the market try to push to the upside, and then we ended up seeing a reversal right back to the downside. So these little intraday reversals have been something of a noticeable price action wise for these past 2 days here. I want to see if we end up breaking down towards that 37.20, 37.21 level on futures tomorrow. Do we see that kind of intraday reversal tomorrow morning back to the upside? In which case, you can basically see if you end up holding that support at 37.20, and we can start to find a base here for that intraday reversal tomorrow. You basically can target right back up towards the top of the megaphone. So that's going to be what's going to be interesting to me tomorrow. It's just kind of acting how the fact are we going to continue those intraday reversals, or are we going to see actually a strong trend day tomorrow? All right. So that's what most importantly I want to just point out there. Again, 37.20, 37.21 to the downside. If in fact we end up breaking south of this megaphone, I'll be watching for the downside towards 36.76 is what I'm going to be looking at. All right. Otherwise, again, like I mentioned, let's see if we can end up holding that 37.20, 37.21, and we can basically break north right back above 37.44 to make a strong reversal. All right. Otherwise, I can actually get into a few of the names. Actually, I did want to point out one other thing was the VIX. If you actually take a look at the VIX here on the hourly, it also gives you the fact of this little indecisive movement as well. And that was basically the fact that you see a nice little wedge here off the hourly. So that's what's something a little bit noticeable to me, in which I saw that you can basically see you're getting towards the end of the wedge here. In which case, I want to see if we end up breaking north, in which obviously we're going to break south of that megaphone, or do we end up seeing the resistance here? We break back towards support, and then we can end up seeing the market rally towards the top of that megaphone that I mentioned. All right. So that's what I'll be watching for. Otherwise, let's go ahead and take a look at some of the tickers that you guys actually just mentioned. Uresh, you mentioned JPM. Let's take a look at JPM first. Let's see what's going on with this one. See if we can get out to the daily. All right, so looking at the daily, this is actually right at my support. I actually have a line drawn right there at this little drop that we're sitting here right now. Is that 108.23 was my support level. That's what I was particularly watching for. Now, if we see any kind of excessive move to the downside here, my next level of support would particularly be 106.16. And below 106.16, then I would be watching for this to particularly make a new bear market low under this 104 mark. So under that 104 mark, if we do particularly break down towards a new bear market low, then it would not surprise me that we end up seeing that $100 mark being a mental target, and that'll be where the market starts to continue to melt down. And like I mentioned, that megaphone on futures continuing to basically, if it breaks out, we're likely going to see a bigger waterfall to the downside. All right. But otherwise, 106.16, let's see if that particularly holds. Otherwise, I'm looking particularly for that reversal at this very moment in time right now, as my support is sitting here at 108.23. And then we're going to look to reclaim back north of over 110. All right. Over 110, I believe that's where you can start to target towards that 50 EMA, sitting at 113.88. And that'll be where I would say is your potential upside that you're looking for. All right. Moving on, let's see. The next ticker was AMD. AMD was something that it's a little bit in a tricky spot right now. I do have quite a bit of a bearish megaphone on it. That's basically just looking at structure wise. Not to say that this can invalidate, but I was looking for this. You can obviously see here, obviously on the hourly here as well. You have a relatively strong support, and that's why I say it's a little bit of a tough spot here. Is that you have confluence with the 20 EMA and the 50 EMA here on the hourly, and that's why it's actually held up as well as it has today. So you have that support at this high 67 mark. That's where you're going to look to see if you can base tomorrow, break north over 68.79, confirm a breakout north over 69.82, and I believe you have a clear path towards potentially testing that 200 EMA sitting up towards 74.84. All right. Otherwise, if we end up cracking this EMA support that looks relatively strong right now that I'm saying, if you break south or under 67 here, that's when I do believe that you're going to make ways down towards the trendline support of this ascending broadening wedge, and you're going to look towards support down towards 65 half, in which case it's going to be a waterfall under 65 half, because that pink shaded area is a 4-hour gap fill that will take this down towards 62. So that's going to be more so in conjunction with the market if in fact we end up seeing a waterfall. That's when it's going to get more concerning to the downside. But like I say, key level 68.79, you confirm the breakout over that 100-day EMA over 69.82. And if you're looking for a potential swing, targeting 72.80 and 74.84 at the 200 EMA. All right. Moving on, you did also mention BA. Let's take a look at BA. Another one, quite a structure that you have going on. If I actually zoom out just to give you a bigger picture, what you can basically see in the larger degree shaded area here is a descending channel action that's taking place here. But now, as I go back into zoom into the structure that we have the past, I want to say 2 3 days here maybe, if you can actually see, this is a little bit of a wedge that you are sitting in here right now. And that's why I say it's a little interesting how the market has actually left us within such an indecisive structure across the board, because it is going to come down to the job numbers tomorrow. So breaking north here, you're going to want to see this break north over the 100 EMA, over 134.32. You're targeting the full on gap fill up towards 138.60, and that'll put you right in towards the 200 EMA sitting at 141.21. Otherwise, another one that's sitting with a little bit of confluence of some, I want to say a little bit of a support here, but the fact that you have again two EMAs at the same conjunction, basically same spot, that's what's actually a little more intriguing. So I'm gonna be looking for this to hold above 130 half. If you end up breaking south on under 130 half, you're going to break below that 50 EMA, break below that 20 EMA, and that's going to take you towards the gap fill to the downside here, towards 126.90. All right. So that's what I would particularly look for. Just to, again, giving you both sides scenario, because a lot of indecisive structures in which you're sitting in certain patterns, particularly, but there's no evidence of whether the fact that you're going to break north or you're going to break south. All right. Moving on, I'll get to the other ones real quickly. Let's see. Wayne, you actually mentioned Nike. I haven't looked at Nike in quite a bit of time. It's actually one that I haven't looked at. And this is another one. Your sandwich between two EMAs has actually been, if you haven't noticed, that's actually been exactly what I'm noticing across the board. Your sandwich between the 20 EMA and the 50 EMA here on the hourly. That's what's more so the problem right now off of this one. I would say this actually looks like you have, let's see if we actually do have a clear trendline support. No, we do not. So not necessarily a clear trendline support. I would say, in fact, you actually broke the trend line support, particularly off of this one. But that's not necessarily what I think is going to be the decisive moment for this. What I could actually draw more so to give you a better structure is a little bit of a wedge action that's taking place. So if I draw out this wedge here, now you can particularly see the better structure that's pretty much in play. In which case, you could either break south of this wedge or you break north, and that would take you. So I want to say the indecisive structure here, in which you're looking for a break north or south. You're looking for the break north over 3105, in which case you're looking to play the gap fill to the upside towards 95. Or you're looking for the breakdown below the 20 EMA here, under that 89.90 spot. You have a little bit of a, I don't want to say strong relative support, but you could say roughly support here at this 88 half, and then you would target gap fill below 87, and that'll be roughly about $1.50 gap fill to the downside. All right, that's basically what I would look at that. I mean, going out towards, let's see if I can actually stretch this out to the weekly, if there's anything that tells me that. You could say you have a nice little tweezer bottom. That's something that maybe favors here off of the weekly. That doesn't necessarily say that you can't basically retrace back down towards that 87 mark is what I'm looking at. If for some type of support here off of the weekly is 87. Otherwise, you break below 87 looking at the weekly here, that's going to put you right back down towards the low here that you relatively had since the beginning of this bear market. All right. So 87 could potentially retrace as support here, just looking at the weekly. But if this is going to play out as a tweezer bottom, this is what you're going to want to look at going into tomorrow. If that is potentially a tweezer bottom, then that would play out the case, and you could look for that upside price action as I outlined those levels. All right. The other one you mentioned was Tesla. I didn't look at Tesla today either. It felt like a little bit more of potentially chop. Did I actually look at this? Okay, wait, I take that back. I did look at this. So, bigger structure here, you can basically see is that you broke down below a broadening wedge. I think that's one of the bigger things to highlight. If you weren't aware of, you broke below that broadening wedge here, dating back towards the 3rd of this month. You got the retest already that potentially went up towards that 255 half mark. And what's more intriguing now is that you have a bear pennant pretty much sitting here. That's what's being outlined right now is that bear pennant. So levels that I'm going to look for is to confirm under 235. Well, not necessarily confirm. You're going to look for the breakdown under 235, but to see the aggression to the downside, particularly that waterfall, look for it to confirm under 233, in which case you're going to take out what's currently our bear market low here at this 233.27. And that's going to set up for the bigger level of waterfall here, in which case your next level of support that I have particularly standing out here is going to be down towards 228 half. Below 228 half, then I would target right around right around towards this 221 here is where I would particularly see that you find your relative support. All right. So that's looking at Tesla. Let's see what else is on the list. Veer, let me get to some of the names that you outlined. You mentioned HD, Home Depot. Let's take a peep at Home Depot. So this is one that I actually was relatively bearish. It does look like the bearish scenario has actually played out to some degree here so far. You had the head and shoulders inside of a broadening wedge as I kind of zoom out there. You had the breakdown below the neckline. You attempted basically to have your retest. And you could basically see you had a nice wedge. And that was the key level here. Is noticing this wedge. You saw the retest of the neckline. You basically retested that wedge as support, and that's what gave this legs towards the upside. And once you saw this start to reclaim above the neckline here at this 283 mark, that's when you should have started to target that 200 EMA, as you know that the bearish trend was starting to basically break down. All right. So above the 283 spot, that was pretty much your zone right there. Now you're pretty much coming into the fact that you have a nice little gap fill sitting at the top here. I would assume if the market does rally rather earlier on tomorrow, that could potentially be filled rather quickly. So this is more so the play that I would look for. If you can get a break north of 294, you could potentially look for that gap fill. And it all depends upon how the broader market is looking if you decide to take that early entry on this one. But otherwise, support you're watching for is that 200 EMA. If we do see a little bit of a whipsaw to the downside, I could potentially see that being broken at that 289.53 spot. But the bigger level of support that I need to see hold on here is roughly at that 286.92. All right. And that kind of goes into the sense of where I said we could see the market give us a little bit of a drop earlier on off of those job numbers tomorrow, and in which case you could see this dip down towards 286.92. But then look to see if you get some kind of meaningful reversal at that level, in which case that may be the ideal spot to get for the reversal and then trade this up towards the gap fill to the upside. Otherwise, you break down below 286.92. That's when I do believe that this is going to start to break back down, and you're going to look to confirm a bigger breakdown below 284.83. And then next level, so first PT will be looking at 282.92. And below that, I will be watching your next level support down towards 278. All right. So that's just giving you a breakdown level by level there. Veer, you also mentioned Amazon. Let's take a peep at Amazon. Another one, you have a nice little pennant that's sitting here right now. You had a little double top action that took place from yesterday's, 2 days ago rather. But you do have this little wedge that's taking place in which it's a little bit of a indecipher of where you're particularly going to be going. You do have an incomplete gap fill that's sitting up towards 125 half. But then you also have pretty meaningful support here that's sitting at that 119 low, 119.23, where you have the 50 EMA and the 20 EMA as your level of support. So downside, you're gonna watch for this to break down below 119.23, confirm under 117.99, and that would put you right in towards the gap fill to the downside. That's left incomplete as well to 116.63. Otherwise, upside you're looking for, look to see if you can get a break north above 121.97, and you're going to be targeting that full-on gap fill to the upside at 125.50. All right. Let's see what else you mentioned. All right, Tom, you mentioned INTC. I'll take a peep at that. Choose. Not sure if I covered Apple. I did not cover Apple, so I'll get to that one as well. So let's see INTC first, and then I will get to Apple to wrap things up for you guys. Another one that you pretty much had a nice little double top yet again here. You had a double top dating back towards yesterday's price action. That was not very pretty off of that one. And then you do have a level of support as well. Nice little trendline support. If I can just get a trendline, there we go. You have a trendline support that's sitting right about here, in which case you're going to see if this particularly breaks down, or do we end up holding that key level support going into tomorrow? So you're already under basically every level of EMA here currently right now. In terms of support, that I will be watching for. If you do particularly break down below this trendline support, below this 27 mark, I will look for support, particularly down towards 26.76 is what I'm looking at for support. So 26.76, we could hold that support. That'll be where I say you look for a base to build, as I do see that it is pulling down after hours. But 26.16, 26.16, that's roughly where I would look for. Look to see if you can pretty much build a base, and then at whatever given point you can reclaim above that 20 EMA, above 27.26. Otherwise, if you can't hold that 26 level, that's where it gets dicey. And of course, below that 26.60, see what I actually remembered. Lost track of my number. 26.66. I apologize for the number. Right below 26.66, that's where it's going to take you down to 26.20, and you're going to flirt with your bear market low. All right. So that's what I would look for INTC. Below that, you mentioned Apple. Let's take a peep at Apple. I believe Apple was actually showing some relative strength earlier on this morning, but that was not the case. Pretty much after the market started to regress. The bigger thing here is that obviously you have a beautiful little descending channel action that's taking place. That's pretty much the bigger degree that you're looking for. But then again, like I mentioned with other tickers, you're sandwiched between two different EMAs. You have the 20 EMA acting as support into the close here right now, and then you have the 50 EMA above us at 147.60. Right, and I gotta say, I think one thing to pretty much highlight, like I was actually mentioning about the fact that the market is likely gonna see a dip tomorrow morning, and it's gonna be a question mark as to whether we end up getting a reversal. I can basically see the fact that the market wants to lean into that bearish case scenario overnight here, as we see the market kind of dipping here as well across the board. So it would not surprise me that we particularly see the market start to basically open red tomorrow ahead of the job number. We maybe see a leg down after the numbers come out, and then we go to the scenario in which case I'm going to look for that reversal back to the upside. That's where I'm kind of leaning towards, just noticing how across the board in tech especially, that a lot of these names are kind of dipping down into the red zone. All right, but otherwise, looking at Apple here, again, you're basically sitting right at 20 EMA, 145.45. I would look for the breakdown below 145.12 tomorrow. Below 145.12 tomorrow, that's where I would target down towards 141 is my overall PT here, sitting to the downside. In which case, that's also going to put you, if I kind of just, let me see if I can just stretch this out just a bit. If you break down below the 143 here, below the 143.80, that 141 would put you right down towards the halfway mark of this entire overall descending channeling action. All right. So 141 is what I would particularly be looking for. At that level is that 141, and then we will particularly be looking for the reversal back to the upside. Otherwise, you melt below 141 here. That would particularly end up being more significant and taking out the bear market low. All right. Otherwise, I am gonna actually wrap up there, guys. Calling it a little bit short here. I appreciate all of you guys joining. But hopefully, I was able to kind of cover some of the tickers that you guys actually mentioned. I see that we're kind of going across the entire queues, as you guys are pretty much just outlining there right now. But I just want to go ahead and kind of cut it short there. Again, I appreciate all you guys joining as always, but I will leave it there as is. And you guys all have a great evening and have a great weekend then. All right, guys?